The Trade Desk stock is now down over 57% year to date in 2025. And because of the price action compared to company performance, I'm going to make a prediction about Trade Desk stock, something that I think the management team is going to do as a result of this declining stock price. I'm going to share with you some of the details of its latest quarterly performance and make my prediction for what I think Trade Desk management will do to response to this price action. And it's going to be pretty interesting, so you're going to want to stay tuned. Let's jump in. All right, so in its latest quarter, which was Q2 2025, when the management team reported their financial results, the stock price crashed following the release. It fell more than or roughly 40%. But the company reported 694 million in revenue, representing 19% year-over-year growth, with profits also expanding. So typically you don't see a company stock price falling by this much with this kind of performance. And some of the price action had to do with what investors were anticipating from the company in future years and future quarters. And so that had a lot to do with the stock price decline. But the actual performance so far isn't showing big signs of being a business that's in such a situation to deserve this kind of a price drop. They also generated 271 million in adjusted EBITDA, or about 39% of revenue. And these are good margins for a growth company in the early stages of development. An EBITDA margin or adjusted EBITDA margin of 39% is a strong margin. And at the same time, the company is still growing revenue around 15 to 20%, which should help improve those margins further still. Furthermore, the markets the company operates inside are still expanding. For instance, connected TV represents a high 40% share of their overall business. Now, this is the category that's under biggest risk because of Amazon's decision about its own inventory and partnering with Roku, and that could threaten some of the share the Trade Desk has in this category. But the overall size of the pie is increasing so substantially that there's still growth to be had. For instance, ESPN is about to launch from Disney, and that's going to have a meaningful impact on consumer behavior, shifting from linear TV, satellite, and cable TV, switching over to streaming instead.
Click the link below to watch the full video.